Right, something that I think makes total sense ultimately. I get this question a lot. How can I be more confident in the strategy? Yeah. Excuse me. And it's this equation. Confidence comes from data and time. Confidence doesn't come from buying something and going live with it straight away. Starting a challenge on Monday when you've not even passed challenges before with it. Confidence isn't trying something for a week and seeing that you've had success. Yeah. Data times time, you've got to have resilience to that. You've got to be aware of that, and you've got to hopefully have something like hopefully what we provide, where you can look back at a load of data, which also helps understand and then plan and forward test from it. So confidence directly correlates to this. And if you're unconfident, it's because you've not done enough work here to either test back or forward and gain an understanding. So hopefully that resonates with some of you. Right, into some nitty gritty stuff now. So I'm just checking how I'm doing for time. Fucking hell. How to manage your risk properly. So if we're taking a normal trade with a stop loss and a take profit, then this is the structure. So what drawdown are you looking to plan for? If you've got a grand account, how much of that are you really going to risk on this strategy in terms of your maximal drawdown? Yeah, that's that one strategy, by the way. So if you say 20% and you're trading 2 pairs, then that's 10% each. Yeah. What data backtesting have you got that supports that strategy to give you trade data, win rate, losing runs, all of that stuff? So yeah, win rate, then we can plan for probability and choose a suitable risk. So I'm going to show you, let's look at AUD NZD. Yeah, we've got 289 trades. We've got a 67.47% win rate, and we've got data going back to the 2nd of January 2020. So I'm going to add that onto here. Yeah, how many trades was it? Let's have a look. 289 trades. So we've got 21 months in the backtest data. We've got a win rate of 67%, and we want to plan for 10% maximal drawdown on your account. What that is not open P&L. It's how many losses you might see consecutively to take you to your 20% level. Now, what this then gives us is probable, unlikely, and very likely losing runs. Yeah. And I was speaking to a large hedge fund manager not too long ago, and what they would do is double that losing run that they've seen in the data within their drawdown. Yeah. So that really does then give you a lot less stress, doesn't it? If you've doubled the losing run that you've ever seen before within that figure, then that's quite powerful. Most won't do that in the retail space, but it's just an example. So let's say unlikely max losing run is 8. Well, let's just scroll through. I haven't actually got that number, but we can quickly, we've got 3, 2, 2, 2, 2. What we got here? 1, 2, 3, 4, but then a winner and a couple of losers. Nearly at the end. You can see these winning runs, but there are losing runs too. You could start this tomorrow and hit 4 losers. 3. Okay, so the losing run in the testing, from what I can see there, is 4. So here you go, very likely. So that sort of matches, doesn't it? Now let's say we want to plan for 8. Then that's a 1.25% risk per trade, let's say. Let's look at risk of, I can't even say it, risk of ruin, and go, okay, I want to risk 1.25% per trade. Hopefully you can see this. That's a risk of ruin calculator on, let's call it actually 1% risk, because this makes that really, really simple then. So if we were to go, let's say we planned for 10, yeah, a 1% risk per trade. Click calculate. What I've done here is I've got a win rate of 67%. Let me try and make this bigger, actually. There we go. Win rate of 67%, average win, average loss, risk per trade, loss level of 10%. Let's say we're doing 300 trades. calculate. So there is a 1.9% risk of you hitting your 10% level. Yeah. But if I over risk this and went, okay, do you know what? I'm going to go 4% risk per trade. You're going to hit that 10% level very, very quickly. Yeah. And then take this even further. There's a good Monte Carlo simulation on forexsignals.com website that came up one day. And let's do the same thing. Let's risk, let's actually do 1.25%. 67% winning trades, 20 trades a month, 1-to-1 risk to reward, because this trade has, we go to the performance summary and we've got data here, 1.026 per average win, average loss. Yeah, so we're actually just a little bit above 1-to-1 RR. So Monte Carlo simulation, simulate returns. Oh, it doesn't, 1.2. Okay, so this is where, as a trader, if you're trading in any way, shape or form, this helps you see compounding. This helps you see the variables. This is the same data, yet you could have been down here on your P&L, 14 grand, or you could be all the way up here on your P&L. That's just math and probability, taking the data that we've seen before, mixing it all up, what are the variations of it, bang, and giving you all of these projected outcomes. Now, what it's saying here is actually on that 67% win rate, on that amount of simulations, you will see at some point a max losing run of 8. Yeah, which is what our calculator said was unlikely max losing run. So unlikely doesn't mean impossible. It's possible, but not probable. Yeah. But this tool helps you see that. You go to your worst run. Actually, the worst run is 6 within that calculation. So between 6 and 8, you're planning, but possible is still 8. And this is all within this data, right? But I ask you again, if you started in October and lost 4.8%, would you sustain with this? Because you've not seen this, you just start here. Fucking hell, that's unlucky. Or you're 3% up in 2 months, you probably quit. But then look, yeah, you've got to understand these winning and losing runs, when they happen, you're not going to know. But what have we seen before? Yeah. Use Monte Carlo to project what that might look like in the future. And this is very simple. Look at the returns here. Yeah. So this is 1,000 account going to 38 grand in 48 months. You know, even the best, I mean, they're crazy numbers. But they're not crazy, because all we're doing is going, okay, I'm risking 1.2% per trade on a strategy with a 67% win rate with a 1-to-1 risk to reward. That's it. Not a 1-to-2, 1-to-3, 1-to-4. Doesn't matter. We have an edge. This is an edge bigger than every single casino in the land. But it might seem small to a lot of traders. And some traders probably won't like to make just these smaller numbers at the beginning. You know, compounding can take a while to take effect, as you can see there too. Yeah. So I'm going to close these screens down now, because I know that then I've covered that and that. Hopefully there's some questions when I get back to the screen. I've lost, here it is. Okay. So in summary, plan for your maximal drawdown. What data have you got? The win rate is not related to P&L, net profit. Win rate is only useful for you to plan your starting risk per trade. I could plan data in there with a 35% win rate strategy with a very high risk to reward and probably outperform them stats. But I'd be risking a much smaller amount per trade, like the dice, because I'm going to get lots of 1-to-5s. And if I had 100 quid and traded at £10 per roll of that dice on the 1-to-5, I'd run out of money very, very quickly. Yeah.